Question 1. Which of the following is a key element in the risk management process during underwriting? A. Moral hazard. B. Policy issuance. C. Premium determination. D. Claims frequency. Answer A. Moral hazard. Explanation. Moral hazard refers to the risk that the behavior of the insured party might change as a result of the insurance coverage. It is an important element considered during underwriting because underwriters assess the moral risk when deciding to offer coverage or set premium rates. A person who behaves recklessly or with less caution because they are insured represents a moral hazard. Underwriters aim to minimize this risk by evaluating the applicant's history and behaviors. Why the other answers are incorrect? B. Policy issuance occurs after the underwriting process, not during the risk management process. C. Premium determination is a step in the underwriting process but is more closely related to the financial aspects than risk management. D. Claims frequency relates to claims data, not directly to the underwriting risk management process. Question 2. Scenario. Mr. Stevens has applied for a health insurance policy. During the underwriting process, it is discovered that he has a history of smoking, is overweight, and has a family history of diabetes. Based on these factors, what is the most likely underwriting decision? A. Mr. Stevens will be approved for a standard health insurance policy. B. Mr. Stevens will be declined for health insurance coverage. C. Mr. Stevens may be offered coverage with a higher premium or policy exclusions. D. Mr. Stevens will be approved with no change to the premium rate. Answer C. Mr. Stevens may be offered coverage with a higher premium or policy exclusions. Explanation. Underwriters evaluate various risk factors when deciding whether to approve, modify, or decline coverage. In Mr. Stevens' case, his smoking, overweight status, and family history of diabetes increases health risks, making him a higher risk to insure. As a result, the underwriter may approve the application but include higher premium, reflect the increased risk, or apply policy exclusions related to conditions that are predisposed due to his family history. This is a common outcome for applicants with high health risks. Why the other answers are incorrect? A standard policy would typically not be issued without adjustments for the increased health risks. B. A decline is not always the only option. Insurers may still offer coverage with higher premiums or exclusions. D. Approving with change to the premium would not be reasonable given the risk factors presented. Question 3. Which of the following is a critical element of a life insurance contract? A. Loss reserves. B. Legal capacity. C. Endorsements. D. Exclusions. Answer B. Legal capacity. Explanation. Legal capacity is one of the fundamental elements required for the formation of an insurance contract, including life insurance policies. For a contract to be legally binding, both parties, the insurer and the insured, must have the legal capacity to enter into the agreement. This includes being of sound mind and of legal age. If an individual is underage or mentally incapacitated, the contract may be or require a legal guardian's involvement. Why the other answers are incorrect. A. Loss reserves are related to the insurer's financial accounting, not a contractual element of life insurance. C. Endorsements are modifications to a policy and are not part of the core contractual elements. D. Exclusions refer to specific conditions or risks that are not covered by the policy, but they do not represent a critical element of the life contract's formation. Question 4. Which of the following best describes the role of an underwriter in risk selection during the underwriting process? A. To determine the premium rate based on the applicant's risk profile. B. To decide if an applicant is eligible for insurance coverage based on risk factors. C. To issue the policy once the risk is accepted. D. To evaluate the claims history of an applicant. Answer B. To decide if an applicant is eligible for insurance coverage based on risk factors. Explanation. The primary role of the underwriter in risk selection is to assess an applicant's risk profile and determine whether they should be offered coverage. This involves reviewing factors like health history, occupation, lifestyle, and other relevant risk factors. If the risk is deemed acceptable, the underwriter will approve the policy, often with modifications such as higher premiums or exclusions. If the risk is too high, the underwriter may decline coverage. Why the other answers are incorrect. A. Premium rates are determined after risk selection based on the type and level of risk involved. C. Issuing the policy is the final step, not part of the risk selection process. D. Evaluating claims history may influence the underwriting decision, but it is not the primary role in the risk selection process. Question 5. Which of the following is a primary factor influencing the underwriting decision for a property and casualty insurance policy? A. The applicant's occupation. B. The location of the property. C. The applicant's age. D. The applicant's family history. Answer B. The location of the property. Explanation. The location of the property is a critical factor in property and casualty insurance underwriting. Underwriters assess the risks associated with where the property is situated, such as flood zones, wildfire risk, crime rates, and the likelihood of natural disasters. This influences the coverage options and premium pricing. Properties in high-risk areas may face higher premiums or limited coverage options. Why the other answers are incorrect. Occupation may influence underwriting for certain types of policies, e.g. life insurance, but it is less significant for property and casualty insurance. C. Age is a more important factor in life and health insurance underwriting, not typically in property and casualty policies. D. Family history is generally not a significant factor in property and casualty insurance underwriting. Question 6. Scenario MS. Turner is applying for a life insurance policy and has a history of high cholesterol, which she is managing with medication. She is otherwise in good health. During the underwriting process, what might the underwriter do based on a medical condition? A. Approve the policy with a standard premium rate. B. Decline the policy due to her high cholesterol. C. Approve the policy with an exclusion related to heart disease. D. Approve the policy with a higher premium due to the perceived risk. Answer D. Approve the policy with a higher premium due to the perceived risk. Explanation. In underwriting life insurance, a history of high cholesterol may be viewed as a risk factor for future heart disease. However, if the condition is being managed effectively with medication, the underwriter may still approve the policy but with a higher premium to reflect the increased risk. The underwriter will consider the applicant's overall health and whether the condition is well controlled. Why the other answers are incorrect. A. Standard premium rates are typically not offered to applicants with significant medical history or risk factors. B. Declining the policy is an extreme measure and typically would only occur if the medical condition is severe and unmanaged. C. While exclusions may be considered, higher premium is a more common approach to managing this kind of risk. Question 7. Which of the following is a violation of anti-discrimination laws in underwriting practices? A. Charging a higher premium for a smoker compared to a non-smoker. B. Declining coverage based on an applicant's criminal history. C. Using an applicant's race as factor in the underwriting decision. D. Applying exclusions for pre-existing medical condition. Answer C. Using an applicant's race as factor in the underwriting decision. Explanation. Under federal anti-discrimination laws such as the Equal Credit Opportunity Act, ECOA, and Fair Housing Act, insurers are prohibited from using certain factors like race, ethnicity, and gender in underwriting decisions. Discriminating based on race violates these laws. Insurance underwriters must make decisions based on relevant risk factors like occupation or lifestyle, but not on protected characteristics like race. Why the other answers are incorrect. A. Charging higher premium for smokers is lawful and reflects the increased health risks associated with smoking. B. Declining coverage based on criminal history is acceptable in many cases, particularly if the crime is relevant to the coverage being applied for. D. Applying exclusions for pre-existing conditions is common and accepted practice in insurance underwriting. Question 8. Which of the following is considered a moral hazard in the underwriting process? A. A policyholder who installs an advanced security system after purchasing home insurance. B. A driver who frequently takes unnecessary risks because they know they are insured. C. An applicant who has a high credit score and stable financial history. D. A property owner who maintains the property to prevent damage. Answer B. A driver who frequently takes unnecessary risks because they know they are insured. Explanation. Moral hazard refers to the increased risk that arises when an individual's behavior changes because they know they are insured. In this case, the driver taking unnecessary risks, knowing that the insurance will cover the damages, is a clear example of moral hazard. Underwriters aim to identify and minimize such behaviors to avoid higher claims. Why the other answers are incorrect. A. Installing security system reduces risk, which is considered favorable risk behavior, not moral hazard. C. High credit score and stable financial history are signs of good risk, not moral hazard. D. Maintaining the property helps reduce the risk of damage, which is considered positive behavior for underwriting. Question 9. Which of the following is a critical component of a comprehensive risk assessment during underwriting? A. Understanding the applicant's family history of illness. B. Reviewing the applicant's personal habits and lifestyle choices. C. Evaluating the applicant's education level. D. Assessing the applicant's marital status. Answer: B. Reviewing the applicant's personal habits and lifestyle choices. Explanation: personal habits and lifestyle choices are essential components of comprehensive risk assessment, especially in health, life, and property insurance. Behaviors like smoking, alcohol consumption, diet, and occupation directly impact the level of risk associated with the applicant. This information helps underwriters assess the potential for claims based on lifestyle factors. Why the other answers are incorrect: A. Family history may influence underwriting decisions but is not as critical as personal habits and lifestyle choices. C. Education level is generally not a determining factor in underwriting decisions unless it correlates with occupational risk. D. Marital status is typically not considered key risk factor in underwriting except in specific cases related to life insurance and financial stability. Question 10. Which of the following types of insurance policy would most likely require the use of actuarial tables during the underwriting process? A. Property and casualty insurance. B. Life insurance. C. Health insurance. D. Auto insurance. Answer: B. Life insurance. Explanation: actuarial tables are most commonly used in life insurance underwriting to assess the expected lifespan of an applicant based on various factors like age, gender, and health status. These tables help the underwriter estimate the probability of death and determine appropriate premiums. This data is crucial for setting rates in life insurance policies. Why the other answers are incorrect: A. Property and casualty insurance focuses on risk assessment and property valuation, not actuarial tables. C. Health insurance underwriting also involves assessing risk, but typically does not rely heavily on actuarial tables. D. Auto insurance uses data related to accident risk and driving history, not actuarial tables, for setting premiums. Question 11. What is the primary purpose of a binder in insurance underwriting? A. To temporarily provide coverage until a formal policy is issued. B. To outline the terms of the insurance policy. C. To reject coverage for high-risk applicants. D. To calculate the premium amount for the policyholder. Answer: A. To temporarily provide coverage until a formal policy is issued. Explanation: a binder is a temporary agreement that provides insurance coverage until a formal policy is issued. It serves as a short-term contract between the insurer and the insured, ensuring that coverage is in place while the full underwriting process is completed. Binders are typically issued for a short duration. Why the other answers are incorrect: B. The terms of the policy are defined in the formal insurance contract, not in a binder. C. A binder does not reject coverage, it temporarily ensures coverage is in place. D. Premium calculations are part of the underwriting process but are not the main function of a binder. Question 12. Which of the following is an example of a peril covered under most property insurance policies? A. The insured's failure to maintain the property. B. Loss of income due to a business shutdown. C. Theft of personal property from the home. D. An act of war or terrorism. Answer: C. Theft of personal property from the home. Explanation: a peril is a specific cause of loss covered by an insurance policy. In this case, theft is a common peril covered under homeowners or renters insurance. It is a direct cause of loss to personal property and can lead to claims under property insurance policies. Why the other answers are incorrect: A. Failure to maintain the property is typically an exclusion in property insurance policies. B. Of income due to a business shutdown is generally covered under business interruption insurance, not standard property insurance. D. Acts of war or terrorism are often excluded from most standard property policies. Question 13. Which type of underwriting system uses statistical data to evaluate the risk and determine premiums automatically? Manual underwriting. B. Automated underwriting. C. Risk-based underwriting. D. Group underwriting. Answer: B. Automated underwriting. Explanation: automated underwriting systems use statistical data and algorithms to evaluate the applicant's risk profile and determine premiums automatically. This system speeds up the underwriting process and reduces human error by relying on data-driven decision-making. Why the other answers are incorrect: A. Manual underwriting requires human intervention to assess the applicant's risk. C. Risk-based underwriting is a term for assessing risks but doesn't specify automation. D. Group underwriting involves assessing risk for a group of individuals, not using statistical data for automation. Question 14. Which of the following types of life insurance policies is typically non-participating, meaning it does not pay dividends to policyholders? A. Whole life insurance. B. Universal life insurance. C. Term life insurance. D. Variable life insurance. Answer: C. Term life insurance. Explanation: term life insurance provides coverage for a specific period, e.g. 10, 20, or 30 years, and is typically non-participating, meaning it does not pay dividends to policyholders. It offers a death benefit but no investment component or profit sharing like other life insurance policies. Why the other answers are incorrect. A. Whole life insurance is typically participating, meaning it may dividends based on the insurer's financial performance. B. Universal life insurance is flexible policy but may also be participating depending on the insurer. D. Variable life insurance allows policyholders to invest the cash value but may also pay dividends in some cases. Question 15. Scenario: a homeowner has purchased a property insurance policy with a $500 deductible. During a covered loss, they incur $3,000 in damages. How much will the homeowner receive from the insurer? A. $3,000. B. $2,500. C. $500. D. $2,000. Question 16. What is moral hazard in insurance terms? A. The risk of loss due to economic factors beyond control. B. A situation where the insured takes higher risks because they know they are covered. C. The physical condition of the insured property. D. The legal responsibility of the insurer to pay claims. Question 16. What is moral hazard in insurance terms? A. The risk of loss due to economic factors beyond control. B. A situation where the insured takes higher risks because they know they are covered. C. The physical condition of the insured property. D. The legal responsibility of the insurer to pay claims. Answer: B. A situation where the insured takes higher risks because they know they are covered. Explanation: moral hazard occurs when the insured party takes greater risks or engages in riskier behavior because they know that the insurance company will bear the cost of any resulting losses. For example, a driver may speed or engage in reckless driving, knowing that their auto insurance will cover any damages from accidents. Why the other answers are incorrect. Economic factors affect risk but are not the definition of moral hazard. C. The physical condition of property is related to underwriting risk but not moral hazard. D. Legal responsibility of the insurer refers to liability, not moral hazard. Question 17. Which of the following best describes the term subrogation in insurance? A. The process of evaluating claims for payment. B. The insurer's right to recover costs from a third party responsible for a loss. C. The insured's right to cancel policy before the term expires. D. The process of determining premiums based on risk factors. Correct answer: B. The insurer's right to recover costs from a third party responsible for a loss. Explanation: subrogation is a legal principle that allows an insurer to seek reimbursement from the responsible party for a claim paid out to the insured. If the insurer compensates the insured for a loss caused by a third party, the insurer may pursue the third party for the amount paid. Why the other answers are incorrect. A. Claims evaluation is part claims process, not subrogation. C. The insured's right to cancel policy is unrelated to subrogation. D. Premium determination is part of underwriting, not subrogation. Question 18. Which of the following factors would most likely influence the underwriting of a homeowner's insurance policy? A. The color of the insured's car. B. The age and condition of the home's plumbing system. C. The insured's personal hobbies and interests. D. The applicant's political views. Answer: B. The age and condition of the home's plumbing system. Explanation: the age and condition of home's plumbing system are important factors in homeowners insurance underwriting. Older or poorly maintained plumbing systems are more likely to cause water damage or leaks, which increases the risk for the insurer. Underwriters assess such risks to determine appropriate coverage and premium rates. Why the other answers are incorrect. A. The color of the car does not affect underwriting for homeowners insurance. C. Personal hobbies are not typically considered unless they present specific risks. E.g., owning dangerous equipment. D. Political views are not relevant to underwriting decisions. Question 19. What does an exclusion mean in an insurance policy? A. A provision that covers high-risk events or perils. B. A clause that outlines the responsibilities of the insurer. C. A condition that limits or removes certain coverage for specific risks. D. A premium discount for lower-risk policyholders. Answer: C. A condition that limits or removes certain coverage for specific risks. Explanation: exclusions are specific conditions or risks that are not covered by the insurance policy. These exclusions are listed in the policy and help the insurer define the limits of their liability. For example, most homeowners' policies exclude coverage for damage caused by earthquakes or floods. Why the other answers are incorrect: A. Exclusions are not provisions, coverage but limits on it. B. Clause outlining the insurer's responsibilities is not an exclusion. D. Discounts are not considered exclusions. Question 20. Which of the following is a key feature of an occurrence policy? A. It covers only claims made during the policy period. B. It covers only losses that happen within the policy period regardless of when the claim is filed. C. It provides coverage for a limited duration such as 1 year. D. It covers only specific events outlined in the policy. Answer: B. It covers only losses that happen within the policy period regardless of when the claim is filed. Explanation: an occurrence policy covers losses that occur during the policy period regardless of when the claim is filed. This means that if an event happens during the policy period, it will be covered even if the claim is made after the policy has expired. Why the other answers are incorrect: A. Claims made policies are different from occurrence policies. Duration of coverage is not the distinguishing feature of occurrence policies. D. Occurrence policies cover all perils or events within the defined period, not specific events. Question 21. Which of the following is considered a moral hazard in the context of health insurance? A. A person with a chronic illness using their health insurance benefits frequently. B. A person intentionally failing to follow a doctor's prescribed treatment plan. C. A person with a healthy lifestyle avoiding insurance coverage. D. A person receiving treatment for an injury caused by an accident. Answer: B. A person intentionally failing to follow a doctor's prescribed treatment plan. Explanation: moral hazard refers to behavior where the insured party takes more risks or behaves recklessly because they are covered by insurance. In this case, intentionally failing to follow a doctor's treatment plan is a form of moral hazard, as the individual might believe their insurance will cover the consequences of their actions. Why the other answers are incorrect: A. Insurance benefits frequently because of a chronic illness is not considered moral hazard. C. A person avoiding insurance due to a healthy lifestyle is a rational decision, not moral hazard. D. Receiving treatment for an injury caused by an accident does not reflect moral hazard. Question 22. Which of the following is a key characteristic of self-insurance? A. The insured pays a monthly premium to an insurance company for coverage. B. The insured takes on the full financial responsibility for their own risks. C. The insurer pays for all claims submitted by the insured. D. The insured shares the risk with a large pool of other policyholders. Answer: B. The insured takes on the full financial responsibility for their own risks. Explanation: self-insurance is a method where an individual or business sets aside funds to cover potential future losses. Instead of purchasing traditional insurance, it involves assuming the full financial responsibility for risks rather than transferring them to an insurance company. Why the other answers are incorrect: A. Paying premiums to an insurance company is self-insurance, and that's traditional insurance. C. The insurer paying for all claims applies to traditional insurance, not self-insurance. D. Sharing the risk with other policyholders is characteristic of traditional insurance. Question 23. Which of the following best describes the coinsurance in health insurance? A. A fixed amount the insured pays out of pocket before the insurance kicks in. B. The portion of the medical bill that the insured must pay, typically after the deductible is met. C. A maximum amount an insurance company will pay for medical expenses. D. The amount the insurance company pays to the insured for a covered claim. Answer: B. The portion of the medical bill that the insured must pay, typically after the deductible is met. Explanation: coinsurance refers to the percentage of medical costs that the insured is responsible for paying after the deductible is satisfied. For example, in an 80-20 coinsurance plan, the insurance company pays 80% of the bill and the insured pays 20%. Why the other answers are incorrect: A. That describes a deductible. Coinsurance. C. The maximum amount the insurer will pay is typically the out-of-pocket maximum, not coinsurance. D. This is a description of the insurer's responsibility, not the insured's. Question 24. What is the purpose of a rider in an insurance policy? A. To provide an additional discount on the premium. B. To exclude certain risks from the policy. C. To modify or extend coverage by adding specific provisions. D. To reduce the deductible for policyholders. Answer C. To modify or extend coverage by adding specific provisions. Explanation. A rider is an additional provision attached to an insurance policy that modifies or expands the coverage. Riders can be added to provide coverage for specific risks, such as accidental death, or to exclude certain types of losses. Why the other answers are incorrect. A. A rider does not typically provide a discount, but it may adjust the coverage. B. Exclusions, typically defined in the policy, not through a rider. D. A rider may not always reduce the deductible, but can modify the terms of coverage. Question 25 scenario. A driver has an auto insurance policy with a $250 deductible. After a covered accident, the damages amount to $3,000. How much will the insurance company pay after the deductible is applied? A. $3,000. B. $2,500. C. $250. D. $3,250. Answer B. $2,500. Explanation. The insurance company will pay the total damages minus the deductible. In this case, the driver is responsible for the first $250 of the damages, and the insurer will pay the remaining $2,500. Why the other answers are incorrect. A. The insurance company does not pay the full $3,000 because the deductible is subtracted. C. The $200 deductible is the insured's responsibility, not the amount the insurer will pay. D. The insurer only pays $2,500, not more than the total damages. Question 26. Which of the following is typically excluded from a standard homeowner's insurance policy? A. Fire damage. B. Theft of personal property. C. Flood damage. D. Damage from a fallen tree. Answer C. Flood damage. Explanation. Standard homeowners insurance policies typically exclude flood damage. To be covered for floods, a homeowner must purchase a separate flood insurance policy. Floods are a significant risk that requires specialized coverage. Why the other answers are incorrect. A. Fire damage is generally covered under homeowners insurance. B. Theft of personal property is typically covered. D. Damage from a fallen tree is generally covered if tree falls on the insured property. Question 27. Which of the following statements is true about replacement cost coverage and property insurance? A. It pays only the actual cash value of the damaged property. B. It covers only the value of the land the property is located on. C. It pays the cost to replace the property without deducting for depreciation. D. It provides a lower payout compared to the market value of the property. Answer C. It pays the cost to replace the property without deducting for depreciation. Explanation. Replacement cost coverage pays for the cost to replace damaged property with new items of similar kind and quality without factoring in depreciation. This ensures that the policyholder can fully replace the lost property. Why the other answers are incorrect. Actual cash value deducts depreciation, unlike replacement cost coverage. B. The coverage applies to the property, not the land. D. Replacement cost typically results in a higher payout compared to the market value, as it does not account for depreciation. Question 20. What is the primary function of an insurance adjuster? A. To determine the premiums for insurance policies. B. To investigate and evaluate insurance claims. C. To issue new insurance policies. D. To sell insurance products to consumers. Answer B. To investigate and evaluate insurance claims. Explanation. An insurance adjuster is responsible for investigating and evaluating claims made by policyholders. They assess the damage, determine the coverage, and help the insurer decide how much to pay for the claim. Why the other answers are incorrect. A. Premium determination is done by underwriters, not adjusters. C. Insurance policies are issued by agents or underwriters. D. Insurance is the role of insurance agents, not adjusters. Question 29. Which of the following is a characteristic of a high-deductible health plan? It offers low out-of-pocket costs for insured individuals. B. It has a higher deductible and low monthly premiums. C. It is primarily used for auto insurance coverage. D. It provides coverage for only catastrophic health events. Answer B. It has a higher deductible and lower monthly premiums. Explanation. A high-deductible health plan has higher deductibles and lower monthly premiums compared to traditional health plans. It requires the insured to pay more out of pocket before the insurance starts covering expenses, but the low premiums make it an attractive option for those who want to save on monthly costs. While the other answers are incorrect, out-of-pocket costs due to the higher deductible. Is used for health insurance, not auto insurance. Is cover a range of health expenses, not just catastrophic events. Question 30. Which of the following is an example of direct loss under a property insurance policy? A. Loss of rental income due to fire damage. B. Loss of value of the property due to market fluctuations. C. Physical damage to the property caused by a covered event. D. Legal fees for defending a lawsuit related to property damage. Answer C. Physical damage to the property caused by a covered event. Explanation. A direct loss refers to physical damage to property caused by a covered event, e.g., fire, theft, or vandalism. This is the primary type of loss covered by property insurance. While the other answers are incorrect, A. Loss of rental income is considered an indirect loss or consequential loss. B. Loss of property value due to market changes is not covered by property insurance. D. Legal fees for defending a lawsuit are separate from direct property damage and may fall under liability coverage.